Welcome to ValueVest Daily. Okay, let's just jump right in. Oracle just dropped an absolute bombshell with its Q3 earnings report. And honestly, the numbers are just staggering. The stock has surged, analysts are scrambling, and it really looks like the sleeping software giant has officially woken up to dominate the AI boom. So the big question is this just a temporary sugar rush, or is it a genuine turning point for the company? Well, in this explainer, we're going to go deep to find out.
Just look at this number, $553 billion. Now, that's not Oracle's market cap. It's not even their total annual revenue. This, my friends, is their remaining performance obligation, or RPO. Basically, the amount of future business they have already locked in. We're going to dive deep into this because this single figure, it's the key to understanding why Oracle might just be one of the most interesting plays in the entire AI space right now.
So here's our game plan for this deep dive. First, we'll hit the earnings shockwave that caught everyone by surprise. Then, we'll unpack the cloud engine that's fueling all this growth. Of course, we are going to dig into that massive $553 billion backlog. After that, we'll look at Oracle's huge AI bet, weigh the risks against the potential rewards, and then wrap it all up with some key investment takeaways.
Now, before we get into all the juicy details, here's our usual but very important disclaimer. This is not financial or tax advice. This analysis is purely for educational and informational purposes. You should always do your own research before making any investment decisions, okay? Let's go.
All right, let's get into the numbers that really made the market sit up and pay attention. This wasn't just a beat on expectations. It was a full-blown statement. Oracle basically showed the world that its aggressive pivot towards cloud and AI infrastructure is paying off in a huge way. So let's break down these key metrics. Total revenue. It hit nearly $17.2 billion, which not only beat estimates but grew 22% year over year. But the real story is in the cloud numbers. Total cloud revenue surged 44%, and the infrastructure line specifically, it was up a jaw-dropping 84%. I mean, this isn't just growth, it's hyper-acceleration, and it's pretty much all being driven by AI demand.
So how did this even happen, right? How did Oracle, a company a lot of people see as a legacy database company, suddenly start lapping its competition in the most important tech race of our generation? Well, the answer lies in its cloud infrastructure, which was specifically designed and optimized for the unique demands of artificial intelligence.
And what's really interesting here is the context. Oracle's 84% infrastructure growth isn't happening in a vacuum. I mean, look at this. It's absolutely dwarfing the competition. Microsoft's Azure grew around 30%, and Amazon's AWS was chugging along at about 17% in the same period. So Oracle isn't just participating in the AI boom. It's actively stealing market share from the established leaders. So this kind of illustrates why they're winning. Oracle Cloud Infrastructure, or OCI, it was just built differently. It's optimized with these powerful GPU clusters that are absolutely essential for training AI models. And get this, it's also significantly cheaper for certain AI workloads. So as the bigger cloud providers like Amazon and Microsoft face capacity issues, Oracle is perfectly positioned to capture all that spillover demand. Then you add in these monster partnerships with NVIDIA and OpenAI, plus their sovereign clouds, which are these super secure, isolated data centers that governments love, and you've got a killer recipe for success.
And all of this brings us back to that headline number, that $553 billion backlog. Look, this isn't just a big number. It represents a fundamental shift in Oracle's entire business. It gives them a level of future revenue visibility that is almost unheard of in the tech world.
Before we go any further, let's just make sure we're all on the same page here. RPO, or remaining performance obligations, is basically the total value of all the contracts a company has signed, but for which the service hasn't been delivered yet. So think of it as pre-sold business. It's really the most reliable indicator of a company's future growth because, well, it's already on the books. And Oracle's RPO isn't just growing, it's absolutely exploding. Just 1 year ago, it was at $130 billion. Today, $553 billion. That's a 325% increase in a single year. To put that into perspective for you, that backlog is equal to over 8 years of Oracle's current annual revenue. What's even more encouraging is that the part of that backlog they expect to recognize in the next 12 months is up 40% from just the last quarter. That tells us this future revenue is starting to turn into actual cash flow much faster. Now, growth like this does not happen by accident, no way. It's the result of a massive, calculated bet that Oracle is making on the future of AI.
They're spending billions upon billions of dollars today to build the foundational infrastructure that's going to power the AI economy for years to come.
$50 billion. That's what Oracle plans to spend on capital expenditures, or CapEx, in fiscal year 2026 alone. The vast majority of this money is going directly into building out new AI-optimized data centers all over the world. It's a huge, front-loaded investment designed to build out capacity way ahead of the demand curve they see coming.
So what's the logic behind all this spending? It's actually pretty simple. Step one, the entire AI market is exploding, right? Big tech CapEx is expected to hit $650 billion. Step two, Oracle invests its $50 billion to build the data centers to serve that market. Step three, they use their powerful partnerships with companies like NVIDIA and OpenAI to fill that new capacity with long-term contracts. And the final step, Oracle positions itself to capture a significant 5 to 10% slice of this absolutely massive market. Now, this all sounds incredibly bullish, and it is. But no investment story is ever complete without looking at the other side of the coin. A bet this big comes with equally big risks, and it's absolutely crucial that we analyze them with a clear head. So we have to ask the question, is it really all upside from here? I mean, with this kind of massive spending and a reliance on a few key partners, there are definitely things that could go wrong. So let's break down the debate between the bulls and the bears.
The bull case is crystal clear that massive RPO signals unprecedented future growth. And at a price-to-earnings ratio of 25, the stock still looks like a value play compared to the tech average of 30. But the bear case is just as compelling. First, the company is burning through an enormous amount of cash. Second, geopolitical risks could disrupt the chip supply chain. And finally, being too reliant on partners like OpenAI adds another layer of risk.
And this number right here, this is the heart of the bear case. Negative $24 billion. That was Oracle's free cash flow for the period. They spent $24 billion more than they brought in, mainly because of that massive CapEx. Bulls will tell you this is a necessary investment for a massive long-term payoff. Bears, on the other hand, see it as a dangerous cash burn that puts the company's finances at risk.
Okay, we've looked at the explosive growth, the strategy behind it, and the pretty significant risks involved. So let's synthesize all of this into some final takeaways to help you decide how to think about Oracle stock today.
So what's the final takeaway? The crucial metric you need to watch is the RPO to cash conversion rate. We have to see that backlog turn into positive cash flow. From a valuation perspective, it still looks attractive at a 25 forward PE. Oracle itself is bullish, raising its revenue guidance. Analysts generally agree with a moderate buy consensus. And the market's immediate reaction, that post-earnings surge, shows that investors are really starting to believe in this turnaround story.
I think this quote really just nails the essence of the moment. For Oracle, this wasn't just another earnings report. It was a complete validation of a multi-year, multi-billion-dollar strategy. It solidified the company's position not just as a participant, but as a foundational enabler of the entire AI revolution.
Which leaves us with the final question, really. When you combine a $553 billion locked-in backlog, a growth rate that is just crushing its competitors, and a valuation that is still at a discount to its peers, you have to ask, is Oracle the smartest value play in the entire AI boom? That's all for this one. If you found this breakdown valuable, please subscribe, like, and share ValueVest Daily for daily learning opportunities before you put your money to work.
And one more thing, we love hearing from you, so please put in a comment if you want us to deep dive into any specific high-risk or high-reward opportunities. Thanks for watching.